Majority of forex traders lose to the market because they don't know how to mark out their breakout structure. Most of them think that it's just ordinary drawing lines randomly and drawing lines with all candlestick that they see on the chart, but it is not. So in this video, I'm going to show you how to mark out your breakout structure correctly without anything that is going to feel like it's complicated to you. So in this video, I'm going to show you how to mark out your breakout structure correctly. And I believe that after you watch this video, you are going to know how to mark out your breakout structure correctly. So without further ado, let us get right into the video. All right, traders. So when you see market moving in an uptrend, or when you see market that is buying, so it simply means that price will be moving in structures. And when price is moving in structures, okay, it is, I can use when you are taking a step after the other. I can use it as an example, okay. So when you are walking, you take the first step, okay. When you take the first step, you take the second step, okay. Right, left, right, left. That is how you take your step. So, and this is how price also move, okay. Price move in steps. It moves in structures. All right. So when you see that price is in an uptrend, or why price is buying, price will always move in structure. You should not forget this. Price will always move in structure, and I want to try as much as possible to explain these concepts to you, so that you will not need any video to watch again. I want you to understand this. I want you to understand this without you depending. I want you to understand this without you depending on any other video out there. All right. So stick with me, because this video is going to be a bit lengthy. All right. So when you see price moving in an uptrend, what you want to see is that price will be moving in structure. In what structure? Price will be moving in higher highs, higher low, higher highs, higher low, higher highs, higher low, higher highs, higher low. What do I mean by that? Price will be moving in series of higher highs, and when price move a little bit to the upside, I told you that price will not go in a straight line. Price will seek for more liquidity, or let me say that price will want to buy more fuel. All right. Price will want to seek for more liquidity. Liquidity is called money. All right. So when price will want to seek for more liquidity in the market before it continues that upward movement. All right. It is like a car that is going in a journey, and the fuel that is in the car, it cannot take the car to the journey that is going. So price will eventually, the car will eventually stop at a filling station to buy more fuel before it continues that journey. Same thing applies to price as well. So in simple terms, when price move upward like this, okay, price will want to go and buy fuel. Price will want to buy fuel. Just let me use that word. Price wants to buy fuel, then price will move down a little bit. So when price move down a little bit, it means that price will seek for more liquidity at a demand area, okay. But I think that you may not understand this demand area right here, on this zone right here. But when price make a higher high, price will reverse a little bit, okay. When price buys that fuel, price will then push to the upside, breaking the previous higher high. Then when price break the previous higher high, at this range here, that is where we have our breakout structure, okay. So now you know that after price break this high, price move all the way up here. So when price move all the way up here, price cannot keep going in a straight line. Price needs to buy fuel before it continue the movement. So what we expect price to do is that price will reverse down a little bit, okay, creating another higher low. When price creates an higher low, then price will push to the upside again. Now I don't want this to bore you, okay. It's because I want you to understand how price simply move, okay. So you see, in every bottom of break of structure in an uptrend, there is always a demand zone that is available, because price will not just retest any zones anyhow. Okay, price will not retest any zone anyhow. This is just how price actually reflects in the market. So when you see price moving in an uptrend and price was reversing to the downside, it means that price wants to go and retest the previous demand zone. Okay, so and you can see that when price reach this stage, price reverse all the way down here, retesting a demand zone. Okay, a demand zone is where buyers took over price from sellers. Okay, you know, when price was actually coming down right here, these are sellers trend. Okay, like mini trend, these are sellers trend. So when sellers push price to the downside, buyers have already positioned themselves at this demand area, and this is where they say that, oh, sellers, thank you for reversing price a little bit, now we are still in control of price. That is the interpretation. So when sellers push price to this zone here, to this demand zone, then buyers took over the price and they moved to the upside aggressively, and that is what caused this break of structure. And you can see that price actually give us a series of higher highs, higher low. Okay, so it is the same interpretation you are looking on the screen right now. So I said that in every below every break of structure during uptrend, when price is buying, there will always be a demand zone. So you can see that when price reach this stage, price push to the upside, breaking this higher high again, giving us our break of structure. So it simply means that at this break of structure, there is a demand zone around this zone. Okay, so I'm still going to go to the chart because I want to actually use this one to explain to you before we go into the chart. All right, so you can see that when price reach this stage, creating another higher high, what did price do? Price simply reverse again, retesting another demand zone, then price push to the upside. Can you see? This is just how price move when price is in an uptrend. So right now, let me quickly show you how price move during the downtrend. Okay, so I'm going to be fast with this. Okay, I said marking break of structure the right way, downtrend. So you know, when price is selling, that is when we say that is what we call downtrend. So when price is selling to the downside, price will be creating a series of lower low, lower highs, lower low, lower highs. Okay, let me just zoom out. Price will be creating lower low, lower highs, lower low here, lower highs, lower low, lower highs. Then price will continue in that structure. But what I want you to understand is that unlike when price is in an uptrend, price will be seeking for previous demand zone. But in the case of when price is selling to the downside, price will be seeking for supply zone, because when price is coming from up to bottom to the downside, it means that there are more sellers than buyers, right? So, and this is the interpretation of downtrend. Okay, this is how price move in downtrend. This is the structure at which price move in a downtrend. So you see price move all the way down here, and because price cannot continue in a straight line, price needs to reverse a little bit. When price reverse a little bit, it gives us our lower highs. When price gives us a new lower highs, because it is sellers that they are in power of price, the sellers say that after they push price all the way up here, sellers say that we are still in control of price, we need to push price to the upside. Then they took over the price and pushed the price below this lower low, giving us our break of structure. So when sellers push price all the way down here, after this lower high, we know that this is our new lower low. So price still make this same scenario, price reverse a little bit, creating a new lower high again. And after that, sellers says that we are still in control of price, we will still push the price down. Okay, and you can see that they push the price down again past this lower low, giving us another break of structure. All right, so and you can see that when price was actually breaking structure, it is retesting the demand zone, before it continued this downward movement. Okay, and this zone, I didn't actually draw this zone very well, but I think I should just quickly readjust that. Okay, so can you see that? So this is, so we have our lower highs, lower low. When price reverse, it will respect the supply zone. After it respect the supply zone, then sellers will take over price again and push the price down again. All right, so this is how break of structure, you can mark out your break of structure. So let us get right into the chart now so that you can understand how to actually mark out your break of structure correctly. So I'm going to be using GPP JPY. All right, or okay, let us use GPP JPY. Okay, all right, so this is GPP JPY chart. So I'm going to use this uptrend price to explain how to mark out your break of structure in this scenario. And mind you, this is 4 hours. Okay, so let me zoom this range so that we can see what we are working with. Please, I want you to pay close attention to this video, because I believe that it's going to help you a lot. I believe that it's going to help you a lot. That is the conviction that I have, that is going to help you a lot. All right, so right now we can see that after price sell all the way down here, price was moving aggressively to the upside. Okay, so now there is no clear break of structure around here, because I can quickly show you that this is a consolidation price. Okay, then after that, now we can say that this is at the point at which I can say that there is break of structure begin to happen. Now traders, I want you to note this. What validates your break of structure is when a candlestick close above previous high. Now what do I mean by that? You know that this is let me say this is price creates an higher high and it created an higher low. Okay, so there is a minor break of structure around here though, but this is not a strong candle, so I cannot say that this is a strong candle. But the explanation here is that though there is a consolidation price around here, all right, there is a consolidation price around here, so but we still have our break of structure around here, because you see this candle, this tiny candle that you see here is a strong candle actually, but because if we go now to 1 hour, we'll see that this candle is a strong candle. But let us work with this 4 hours so that we don't get ourselves confused. Now this is a break of structure because this green candle closed above this high. All right, it's closed above this high. So the interpretation is that price simply came creating a new higher high here. All right, then price reversed down here, then price push to the upside, creating this break of structure. Exactly, this is just the understanding. Now let me go to this skeletal drawing. Okay, now you know that I said that there is a demand zone below every break of structure. So now look at this chart again. Now see where do we see our demand zone right here? How can we identify our demand zone? Where we can identify our demand zone is where sellers lose power, where buyers begins to take control of price. And if you look at this trend very well, you see that after price push to the upside here, okay, price actually came all the way down here. Now this is where sellers lose their power, because the next candle that we see is a very strong candle that begins the upward movement. All right, and that begins the upward movement that break this structure. So this is our demand zone. So this is where we mark out our demand zone. The last candle that failed, okay, the sellers that fail to push price to the downside is the one that we are going to mark out. And you can see that after price break this break of structure right here, what the price did, price goes all the way up and retests this demand zone. Okay, so this is a valid demand zone, and the reason why price respect this place is that price was actually consolidating around this area, but because sellers lose their power here, and this is at the point at which this buying pressure is started. Okay, so that is why I mark out the candlestick that actually failed at this zone. So, and that is what price actually did, because price came all the way up and retest this demand zone, and after that you can see that price begins to move in an uptrend. Okay, so but I'm going to keep explaining how to mark out your break of structure. So we know that this is our 4 hour. I don't know if I have 4 hour here. Okay, I don't have 4 hours here, but I think I should just add it right now. 4 hour BOS. Oh, 4 hour demand zone rather. Okay, so this is our 4 hour demand zone. Then I think I should save it so that I can have it right here. I even have it here, man. Oh, I don't know, I have it here. So this is our 4 hour demand zone. Okay, so now that is our 4 hour demand zone. So where is our next break of structure to the upside? Our next break of structure to the upside is this. So I'm simply going to mark it like this, because we can see that this green candle closed above here. Okay, so this is our higher highs, higher low. This is our next higher high. Then where is our next higher low? This is our next higher low. But I'm going to explain this zone as well for you. So now, because we said that below every break of structure there is our demand zone. So which candle failed? That is the question that we need to ask ourselves. Which candle failed below here before buyers took control of price? It is this red candle, this big candle. It is the one that failed. Okay, so you know that this is our next break of structure, right? So since we have our break of structure here, this is the candle that actually failed. Now you can see what price did. Price moved all the way up and came down, though it did not retest this zone like this. But that is another understanding that you need to know, that sometimes you need to actually shift your demand zone a little bit higher above the candle that fails. Okay, so you can see that after price respect this zone, price pushed to the upside. You see, this is just a simple concept, a very simple concept that I believe that it is very simple for even 5-year-olds to understand. Now let us look at another scenario right now. Now where is our next break of structure? This is our next break of structure right here. Okay, this is our next break of structure. So now where is our demand zone below this break of structure? Our demand zone below this break of structure is this red candle. Okay, this is the red candle that fails. So now look at what price did. Just look at what price did, because price simply moves to the upside, creating a break of structure. Then price came all the way down, retesting this demand area. You can see that this is how price simply move. I can go on and on to explain this demand zone for you with break of structure, because it is very simple. It is very, very simple. Price will always move in structure. Price will not just move in a straight line. Okay, so you can see that price is respecting this this analysis. Now let us ask ourselves that where is the next break of structure? Now you are supposed, without even marking it, you are supposed to have identified it already, because this is our next break of structure. Okay, after price created higher high, it creates another higher low here. Now price move to the upside. Okay, price moves to the upside, creating a new higher high, and this is at the place that price creates another higher low. But let me explain how price reacts in this zone. So how price reacts in this zone is that this is the break of structure that we want to work on, right? This is the break of structure we want to work on. So we want to ask ourselves, where is our last where is the candle that failed last? Okay, which means which sellers that fail at this zone. So this is the candle that fails. Okay, because you know that after price create this red candle, we have a strong buying candle, and you can see that it is from this range that price started moving to the upside. So this is the candle that actually failed. Okay, so if I push this candlestick, this zone to the right side, you can see that price respects it. Price will not forget this structure. Okay, price will not forget it. Price pushed to the upside, so price came all the way down, respecting this zone again. Then what the price did, price pushed to the upside again. You can see that this is very simple. Market structure is very simple if you understand how price move. Okay, if you understand how price move, because I believe that this is, in fact, this is the fundamental thing that you need to understand, because if you don't understand this, you cannot take a trade and you'll be profitable. Okay, so now let us continue with our lessons. Okay, so now we know that after price validates this zone and price push to the upside, where is our next break of structure? Okay, so this is our next break of structure to the upside. You can see that this candle that closed is a very strong candle, and you will notice that this break of structure as well, okay, is a very strong candle. Look at this zone as well. Look at this zone as well. It is a very strong candle. Look at this zone as well. It is a very strong buying candle. That is everything that you need, because it is just as simple as this. So now when price actually move all the way up here, what is price doing? Price was consolidating all through this range. Price was consolidating. Okay, but when price is consolidating, it means that this is our last break of structure. So price may not actually came all the way down here to respect this demand zone. So now we want to wait for what price is doing. So now, because after price consolidated, price pushed to the upside. Okay, price broke this consolidation area or zone anyhow. So when price broke through this zone, it means that we have a new break of structure. So let us mark that out, because this is no more valid. So this is our next break of structure. Can you see that? This is our next break of structure. And where is our demand zone? Below this break of structure. Where is the candle that failed below this break of structure? That is the question we want to ask ourselves. Now this is the candle that failed, because this is the last red candle below here. So we want to mark that out, and we want to drag it to the right side. Can you see? Price broke this zone. It broke this zone, giving us a break of structure. Then price came all the way down. We're expecting this demand zone. It is as simple as this. It is as simple as this. Sorry. And after price respected this zone, you can see what price did. Price simply moved aggressively to the upside. All right. Price moved aggressively to the upside. So this is because this is the range at which price refused to continue moving upward, because if price will keep going up, okay, we want to expect price to break this higher high. Okay, this is the last higher high, and this is the previous the last higher low, right? So when price was actually moving up, we expected that it should break this high, but price didn't break that high. Price simply came all the way down. Now I'm not going to explain I'm not going to explain what actually happened here, because I want to quickly explain break of structure and supply zone in a downtrend. So, but don't worry, because at this zone, okay, at this zone there's something that actually happened, but I'm still going to explain that to you probably in the next video. Okay, so right now let us go and look for a downtrend, a downward market. All right, traders, so this is when price is actually moving to the downside. So let us quickly mark out our break of structure and move to the next thing. All right, so we can see that price was actually moving in an uptrend, but at a point in time price reversed to the downside, right? So but let us begin to mark our break of structure to the downside. All right, so where do we start from? All right, where do we start from? We want to start from this zone. Now we want to start from this level right there, because this is a very strong selling candle. All right, this is a very strong selling candle. So it means that we have a break of structure right here. So when we have a break of structure right here, it means that we have supply zone. All right, let me show you the skeletal drawing so that you will understand again. You can see when price push to the downside, when price push to the upside, it means that we have a supply zone here. Same thing is happening right there. Okay, after we have this break of structure, it means that above this break of structure during downtrend, we have a supply zone. So how do we mark out our supply zone? We can either mark out our supply zone with all these ranging price, okay? We can mark it like this, or we look for the last candle that fails. We want to look for the last candle, the last buying candle that actually failed. So can you see, this is the last candle, this very small candle. But one thing that I want you to notice is that when price broke this structure to the downside, okay, price broke this structure to the downside, now price reversed up again, but price didn't reach this zone. Okay, the reason why is because the candlestick that actually failed here is not a strong candle, or I don't think that's the right word. That's not the right word. But the right word is that, let me quickly explain a candlestick for you. Okay, so when you see price, okay, no, I think the understanding is that you can either mark your supply zone with this consolidation trend. Okay, you know, price was actually consolidating at this zone. Okay, price was consolidating at this zone before price pushed to the downside. So you want to mark out all your consolidation area to the right side. Okay, and you can see that in this case price did not respect this buying candle that formed last. Okay, because price did not come all the way up there. So this is another way that you can mark your supply zone. All right, this is another way that you can mark your supply zone. So it simply means that this let me just bring it down. Let me bring it down here and here. So this is our 4-hour supply zone. 4-hour supply zone. Because after we have this break of structure, price created a new lower low, then a new lower high. So when price creates a new lower high here, it simply respects this supply zone. Okay, it retested this supply zone before it continue the selling pressure. So now what we want to do now is that we want to keep marking our break of structure to the downside and applying our supply zone as well. So where is our next break of structure to the downside? Our next break of structure to the downside is this, because you can see that price simply broke, you know, this candle that actually formed here is a very strong candle that closed below this low. All right, because this is our lower low, lower highs, then price broke this lower low here. So it means that this is our break of structure, and we have a very strong candle that confirms that this is our break of structure. So if we continue to move to the downside, we have not really seen a valid break of structure. Now the next place that we can see our break of structure is this zone right here. Okay, if you cannot identify it, this is what you need, because what actually validates this break of structure is that we have a very strong candle to the downside. Okay, so this is our break of structure here. When we have our break of structure, what did price did? Price simply, okay, let me zoom that range. So price simply came all the way down, came reversed up a little bit and broke structure. So now you say that in this scenario, you say that price did not come all the way up here, because I said that you should mark out the candle that actually failed before the major move starts. Okay, so now you see that price did not come all the way up here, and you know I have already told you that there are two ways that you can mark out your break of structure. So you can simply mark out all these ranging price. So when you mark out all these ranging price, this is what gives you confirmation. Now you can see that price came all the way down, tap into this supply zone again. Okay, because this is our new 4-hour supply zone. Can you see that? Then after price retest, it moves to the downside again. All right, so this is just how price reflects. Okay, so this is how price simply reflects. So if I want to continue marking this break of structure to the downside, you can see that after price got to this stage, price simply reversed all the way up and continued the downward movement. So but I'm not going to explain what the scenario that actually happened here, but let me just use this last trend to explain this break of structure to the downside for you. All right, so where is our the next break of structure? Right there at this trend. So this is our break of structure. So now I'm going to be a little bit fast. So when we have our break of structure here, so it simply means that we have a supply zone above here, right? We have a supply zone above here. Okay, can you see that? Can you see what price did? So price simply creates lower low, lower highs. So when price creates a new lower high, it respects this supply zone. Okay, that is the understanding. Price respect this supply zone. So when price respect this supply zone, then price did its thing. Price just move aggressively to the downside. Okay, and we can even barely see a break of structure right there, though there is a break of structure. So there are other break of structure right here that you can notice. Okay, so this is another break of structure here, and this is another break of structure here. Okay, this is another break of structure. Okay, but one thing that I want you to understand is that sometimes price will not move to the previous supply zone when price is selling to the downside. Sometimes price will not move like that, because in this scenario right here, if we mark out our range price here, okay, marking our range price here, you can see that price did not come after price broke through. Price did not come all the way up here. Okay, price did not come all the way up here. Price simply reached this stage and reverse down a little again. Okay, so now I think that I should just simply explain why price will not actually tap into your supply zone as of this example. Now please, I want you to listen attentively. When you see a bearish candlestick that is very strong like this, there is what we call fair value gaps. I think probably in the next video I'm going to explain fair value gaps for you. Okay, I'm going to explain it in depth. But the understanding about why price did not come all the way up here before it moved to the downside is because there is a fair value gap around this zone. Now where is our fair value gap? It means that we have a gap. Okay, now you cannot compare this red candle and green candle the way it formed. You can see that after we have this red candle, the next red candle that formed, it is very strong. The candle is very strong, in so much that there is a gap at this range right here. Okay, there is a gap at, okay, I think I should just I should use an outline in this case. Let me use an outline. All right, so this is our fair value gap, FVG. We usually call it FVG. So this is our fair value gap, and you can see if I drag this fair value gap to the right side, you can see that it is this fair value gap that price actually respect before it pushed to the downside. So in simple terms, when you see strong candle like this, okay, when you see strong candle like this, there is always a gap. Okay, and the gap is kind of, you know, when price, let me just simply draw it like this. Okay, when we have a candle like this, and we have, normally this is how price supposed to react. Okay, this is how price supposed to react, but in this case price reacts like this. Price, okay, let me draw it down. Price react like this, then we have another price like this. Then after we have this move, then price continue to form below this zone. So this is just the understanding, because this is the range at which you can see that these two candlesticks is quite different from this one, these three candlesticks. All right, so this is the gap that I am explaining to you. This is the gap that happened right here. Okay, so this is the fair value gap. Sometimes price will respect these fair value gaps, and sometimes price will not respect these fair value gaps. Okay, so but I believe that you can see that identifying your demand and supply zone in an uptrend and downtrend is a very key understanding that you need to have. You can see that price even keep going to the downside. Now you can see that, see, look at what happened here. Look at what happened here. Price moved to the downside here. You can see this massive, you can see this massive downside. Now when price moved downside here, what did price did? Okay, what the price did, this fair value gap that I just explained to you is what actually happened right there, because above this zone we have a supply zone, right? So we can say that this is one supply zone right there. We can say that this is a 4-hour supply zone, right? This is a 4-hour supply zone, but you see that price did not come all the way up here. Now the reason why is because we have a fair value gap that price actually respects. And where is that fair value gap? This is the fair value gap that price respects. You can see that this candle is quite different from all these ones that you are seeing here. So this is the fair value gap that price simply respects, and I think I should just take it up here. So you can see this is the candle that price respected before price pushed to the downside. In fact, it pushed to the downside massively, because you can see price move all the way to the downside here. So I don't want this video to be long. But what I want you to actually do is that I want you to go on your chart as well. Okay, I want you to go on your chart, and I want you to also apply this key structure. Okay, and I believe that, in fact, it is more like you want to build a house. You cannot build a house on a sand, because your break of structure, your demand and supply zone is very, very important that you understand, because if you don't understand it, you cannot become a profitable trader. This is something that I have tested multiple times in the market, and I have seen that this is the foundational knowledge that you need. Yes, this is the foundational knowledge that you need, and I will be so happy that after you watch this video finish, I want you to go on your chart as well. Mark out your break of structure accordingly. When you see price going in an uptrend, you want to mark your break of structure to the upside, and you want to identify your demand zone. And when you see that price is in a downtrend, when price is selling, you want to mark out your break of structure, and you want to also mark out your supply zone. Please, I want you to do this, because if you don't do this and probably you jump on another video, I can bet it with you that you are still joking with trading, because this is the foundational knowledge that you need, that is going to make you to be a profitable trader in the long run. So traders, I believe that this video is helpful. In the next video, I'm going to explain more about fair value gaps for you, and I'm going to also explain how price flows. Okay, how price flow from buying to selling, and from selling to buying. Okay, it is just a system. It is a system that you need to understand, because price is as simple as ABC. Price is as simple as that. So guys, traders, watch this video once again. If you need to, then practice, because practice makes perfection. So guys, I'll see you in the next video. Thank you for watching.